Moving on to economy from the month of February. Now, RBI's report on state government budgets. RBI has released its report on state government budgets for 2022-23. Now, the key highlights from the RBI's report relates to debt to the GDP ratio, contingent liabilities, and old pension schemes. So the debt to GDP ratio has fallen from 31.1% in 2020-21 to 29.5% in 2022-23. This is very high. Now, the FRBM review committee under NK Singh has recommended a ratio of 20% for the states. A high debt to GDP ratio means states have to pay more interest to service their debts, reducing the budget available for capital expenditures and investments. Now, contingent liabilities. State governments have seen a significant expansion in their contingent liabilities. Contingent liabilities here refer to the obligations of a state government to repay the principal and interest payments in case a state owned entity defaults on a loan. The guarantee issued by state governments have risen from 3.12 lakh crores or 2% of the GDP in 2017 to 7.4 lakh crores or 3.7% of the GDP right now. Now, relating to old pension schemes, some states such as Rajasthan and Chhattisgarh have chosen to shift to the old scheme. This will have adverse implications for the state finances. In 2020-21, states had allocated 3.86 lakh crores towards pensions. Shifting back to the old pension scheme will end up increasing pension liabilities, leaving lesser room for productive spending. Moving on to short selling, US based Hindenburg Research has accused Adani Group of market manipulation. Now, Hindenburg Research is an investment research firm that takes part in aggressive short selling. As per SBI norms, short selling is defined as a selling of stock which the seller does not own at the time of trade. So, short selling, also known as shorting of stock, is a popular trading technique. It can create large profits but can also lead to a lot of loss. The traditional investing approach is buy low, sell high. That is, a stock at a time when its price is low, hold it, and sell it once its price rises. It is based on the expectation of a price rise in price of stock in short selling technique, where there is an expectation that the price of stock will fall in future. Hence, the approach is reversed. Now, the short seller first borrows the stock from a broker, say 100 rupees. The short seller then sells the stock at 100 rupees and earns 100 rupees. The price falls to 90 rupees in future. The seller buys the stock at 90 rupees and returns the share to the broker. The short seller thus earns 10 rupees in this transaction. The activity of short selling has been debated. Experts contend that it can destabilize securities market like stocks, yet it is legal in most stock markets. It is legal in India, but with strict disclosure norms. According to SEBI norms, the institutional investors have to disclose upfront at the time of placement of order whether the transaction is a short sale. However, retail investors would be permitted to make a similar disclosure by the end of the trading hour on the transaction date. So for institutions, it's disclosing upfront. For retail investors, it is disclosing the information at the end of the transaction day. Moving on to observations in the economic survey regarding startups. Now, the economic survey of 2022-23 has noted that the challenges faced by Indian startups. Now, the number of startups have increased from 452 in 2016 to 84,012 in 2022. Now, the key highlights from the report on Indian startups says that India ranks among the largest startup economy ecosystems in the world. Approximately 48% of the young companies in India are from tier 2 and tier 3 cities. The Department of Promotion of Industry and Internal Trade has recognized that the startup have created more than 9 lakh direct jobs. The government has strengthened its intellectual property right regime by modernizing its IP office, reducing legal compliances, and facilitating IP filing for startups, women entrepreneurs, and small industries and others. This has resulted in a 46% in domestic filings of patents between 2016 and 2021. According to the Global Innovation Index of 2022 report, India has entered the top 40 innovating countries for the first time in 2022 by improving its rank from 81 in 2015 to 14th last year. Moving on to reverse flipping. Flipping is many startups have headquarters overseas, especially in destinations with favorable legal environments and taxation policies, technically known as flipping. It refers to the process of transferring the entire ownership of an Indian company to an overseas entity, including transfer of all intellectual property and data owned by the Indian company. Typically, flipping happens at an early stage of a startup. However, several Indian startups are now exploring reverse flipping or shifting their domicile back to India. Now, challenges faced by startups. The survey pointed out several other challenges startup face, such as funding hurdles, struggle with generating and enhancing revenue, lack of access to supported infrastructure, and a complex regulatory tax environment. Recommendations made by the survey are simplifying tax layers, resolving uncertainty due to tax legislation, especially of litigations, especially of employee stock ownership plans, exploring the incubation and funding landscape for startups in emerging fields like social innovation and impact investment, facilitating mentorship programs through partnership with established private entities, simplifying the process for grant of an interministerial board certification for startups. Moving on to the importance of shipbuilding industry. Now, the economic survey of 2022-23 has noted that shipbuilding industry has one of the highest employment multipliers, capable of generating mass employment. Now, importance of shipbuilding industry, it is amongst the highest it has the highest employment multiplier. It has a strategic importance. It has got contributions to in Indian economy, and it has collaborative production system. Now, highest employment multiplier. Among manufacturing activities, shipbuilding has one of the highest employment multiplier of 6.48. It is capable of generating mass employment in remote, coastal, and rural areas. For instance, the recently commissioned aircraft INS Vikrant alone engaged approximately 500 MSME, 12,000 employees for ancillary industries, and 2,000 shipyard employees. Now, shipbuilding industry is strategically important due to its role in energy security, national defense, and development of heavy engineering industries. Now, contribution to Indian economy. A study undertaken by Navy for the construction of seven P-17A ships revealed that 75% of the total project cost of the warship is invested back into the Indian economy. This investment is plowed back into the economy through indigenous sourcing of raw materials, development of equipment and system installed on board ships, and other manpower services. An indigenous shipping and shipbuilding industry can also reduce freight billing and forex outgo, thus reducing the current account deficit. Now, shipbuilding also has links to other ancillary industries, including steel, engineering equipment, port infrastructure, trade and shipping services, which have the potential to create a collaborative production ecosystem. Now, employment multiplier measures how the creation or destruction of output or employment in a particular industry translate into wider employment changes throughout the economy. Each industry has backward, like raw material, and forward, like transportation and distribution linkages. Therefore, creation of direct jobs in the industry creates additional indirect jobs in the related sector. Employment multiplier measures the ratio of total jobs, that is direct plus indirect, created for every one direct job created in the industry. Moving on to angel tax, startups registered with the Department of Promotion of Industry and Internal Trade have been exempted from angel tax. Now, Indian startups raising capital from foreign investors such as SoftBank, Secure Capital have been will also have to pay angel tax. This means non-resident investors will come under the purview of angel tax. Till now, these provisions were applicable only to local investors, but the ambit has been expanded as part of government's anti-tax avoidance move. Now, living off angel tax on forest investments in Indian startups could squeeze funding into startups. The startup sector is facing a liquidity crunch and move may prompt more startups to shift overseas. Now, startups registered with Department of Promotion of Industries and Internal Trade have been exempted from the angel tax. Now, angel tax is a term used to refer to income tax payable on capital raised by unlisted companies via an issue of shares where the share price is seen in excess of the fair market value of the share sold. Now, the excess realization is treated as an income and taxed accordingly. The tax was introduced in Union Budget of 2012 to arrest laundering of funds. It has come to be called as angel tax since it largely impacts angel investments in startups. An angel investor is usually a high net worth individual who funds startups at an early stage, often with their own money. Moving on to champion service sector, the union government is taking several steps to promote the champions service sector. Now, champion service sectors refer to the 12 identified sectors where government wants to give focused attention for promoting their development and realizing their potential. These sectors are information and technology and IT enabled services, tourism and hospitality services, medical value to travel, transport and logistics, accounting and finance, audiovisual, legal, communication, construction and related engineering, environmental, financial services, and education. Now, steps taken to promote champion service sectors. The government has formulated an action plan for champion sector and services and allocated 5,000 crores to support sectoral initiatives for these sectors. The government has followed multi-pronged approach, that is negotiating meaningful market access through multilateral, regional and bilateral trade agreements, trade promotion through participation in an organization of national fairs, addressing domestic sectoral challenges and difficulties through periodic consultations with stakeholders. The BIS, that is Bureau of Indian Standards, has set up a dedicated Service Sector Division Council to formulate industry standards in various service sectors, especially champion service sectors. Now, districts as export hub initiative. Under the initiative, products with export potential have been identified from districts of the country. Moving on to primary agricultural credit societies, the union budget has announced 2,516 crore for computerization of primary agricultural credit societies over the next 3 years. Now, PACS are village level cooperative credit societies that serve as last link in the three-tier cooperative credit structure. The structure is headed by the state cooperative banks at the state level. Credit from the state cooperative banks is transferred to the district cooperative central banks, which is at the district level. The district cooperative central banks works with the primary agricultural credit societies which deal directly with farmers. Individual farmers are members of the primary agricultural credit societies and office bearers are elected from within them. A village can have multiple primary agricultural credit societies. A report published by the Reserve Bank of India in 2022 put the number of PACS at 1.02 lakhs. Now, lending mechanism of primary agricultural credit societies. Primary agricultural credit societies are involved in short-term lending, that is crop loans, at the start of the cropping cycles. Farmer avail credit to finance their requirements of seeds, fertilizers, etc. Banks extend this credit at 7% interest, which is 3%, of which 3% is subsidized by the union government and 2% by the state government. Effectively, farmers avail the crop loan at 2% interest only. Now, PACAs offer the last mile connectivity. For farmers, timely access to capital is necessary at the start of their agricultural activities. PACAs have the capacity to extend credit with minimal paperwork within a short time. Now, computerizations of primary agricultural credit societies. Primary agricultural societies are still functioning manually, resulting in inefficiencies and trust deficits. In some states, standalone and partial computerizations of PACAs have been done. This is in no uniformity. There is no uniformity in the software being used by them, and there is no interconnected with the district and the state cooperative banks. Hence, the computerization of all PACs is being done. The other two tiers have already been automated by NABARD and bought on common banking software. This will also help in improving the outreach of the PACS as outlets for banking activities as well as non banking activities, apart from improving digitalization in rural areas. That'll be it.